to the Daily Coin. My name is Rory. This is part two of my interview with Eric Dubin. This was recorded on Wednesday, January the 21st, 2015. And Mr. Dubin is going to make a couple of predictions that are actually going to unfold exactly the way that he described. If you go back and look at the data on the 22nd and the 23rd, you will see that he is 100% accurate in his forecast. So buckle up and here we go. Is it happening? I mean, are we witnessing the beginning of a global collapse? I mean, I know that it actually started, in 2000 and 2007, 2008, 2009 time
Yeah,
frame. But I mean, is the acceleration happening right in front of us?
yeah. If you went 100 years forward in the future, and you looked back at history books and whatnot, the changes that we talk about on a year-to-year basis, month-to-month basis, would be kind of trivial in the big picture. And when one would look back in time and see that 2007 first bust at the Maiden Lane mortgage-backed securities mutual fund problem with their Alt-A Alt-A mortgages, the subprime mortgages that they held, that ultimately brought down Bear Stearns as the starting point for a lot of this stuff. I was fast forwarding to now, when we've had this bounce that we just spoke about in the 2009 March through 2011 period, and now beginning to fall back down again. All that stuff is going to look completely irrelevant. The big picture, it's going to be the crash of 2007 through 2020.
Yeah.
The Great Depression. So yes, answering your question in the most biggest of sense, yeah, I think that this has been an ongoing process, and a lot of times people need to just kind of cool their jets and look at the really big picture that I just outlined, because that's where we are. And that also is important to consider when one juggles the probabilities when you're trying to forecast what's going to happen, whether it's oh boy, February things are going to start falling apart, or is it more of the Catherine Austin Fitts thesis of the slow burn? And you've talked a lot about that on programs,
Yes.
and talked to Catherine directly about it. It's kind of a hybrid at this point. I think that we're going to have the slow burn continue, but then, there's an old saying, when things start falling apart, they go slowly and then all of a sudden very quickly.
Yes.
And I think that that's our most probable path that we face in the next 18 months, but with some significant, huge downside moves coming in bursts in this year, and one of them being the whole sentiment busting transition that I'm bird dogging at around the end of the first quarter and beginning of the third quarter, somewhere around there, where the debt problem that we have in the oil markets and the emerging markets debt comes and shows itself. I think that people really are not really wrapping their brains around this in the conventional finance world, and it's important to not underestimate the degree to which the levers of liquidity are pulled by these basically uninformed people, or possibly a combination of uninformed and just wishful thinking. A lot of people don't they just don't want to spend the time researching what are in fact probable black swans and scenarios. They just don't do it. I remember back in the 90s when I was doing research and serving as a tech analyst, and I know back in that day, I was probably one of the top 75 well-known technology analysts in the world. I worked as a contractor for Microsoft and managed the TechStalker portfolio on their website at MSN and helped them build all that stuff out. And, long story short, I'd have people like the Fidelity Magellan Fund people coming and asking me, hey, what do you think of this tech stock? What do you think of these semiconductor technologies and whatnot? And these guys, I'd go to conferences and there literally would be more than $1 trillion under management, and some in the room represented by the portfolio managers there. And for the life of me, I was just shocked at the idiocy of the kind of questions that these people would ask, because they basically couldn't, tell how a mouse worked. Never mind what semiconductor technologies were doing. And these guys were managing, individually upwards of $50, $100 billion, and that speaks to the bubble that a lot of these money managers live in. They're not super hard working for the most part, and they have come up through schooling and groupthink realities that are pervasive in the Wall Street firms that they work, such that they just don't see reality for what it is. They're so inclined to just go along to get along and believe that the central bankers have their back, and that what will be the likely outcome in a week forward or a year forward is what we've seen in the past, almost like in forecasting the weather. And that's what you saw with this Swiss franc move.
Yep.
And a lot of firms went bust because they were going short on the thesis that Swiss National Bank central bankers would never pull the peg. That would ultimately draw questions as to whether or not even the euro will survive.
Yeah. Well, and speaking of which, I mean, do you think that the Syriza party is going to? I personally believe that they're going to be elected. I just don't know if they're going to be allowed to do anything. I mean, as far as taking back their sovereignty and getting away from the euro and leaving the European Union or the European Monetary Union.
Yeah.
I don't know that that's going to happen. I don't know that they're going to be allowed to do that. What do you think?
They're going to probably try to do some kind of a negotiated settlement where there's some form of debt forgiveness, and it's going to be a bargaining effort where if it say, and I'm just picking a number arbitrarily, that Greece can have 50% of their debt forgiven in combination with further austerity, that maybe they will accept it. But their political constituency that is going to most likely put them in office doesn't want that. They basically want complete debt forgiveness, and if they don't get it, they're going to increasingly demand that Greece exit the euro. And frankly, I think the best thing for Greece is to just take the bitter medicine, go through a huge depression for 2 years, just like Iceland, and come out on the other side with their own monetary system under the drachma and just wash their hands from it. And frankly, it's hard to say what's going to happen, but I think that outcome has 60% odds.
But that also has huge implications as far as Spain is concerned, as far as
and Italy
is concerned, and Portugal. I mean, it's, these guys, you think that they're not watching with both eyes and listening with both ears as to what's happening? And it's not going to, and nothing's going to change on Sunday. But that time frame that you have mentioned a couple of times now, that, end of first quarter through end of second quarter, that could be when things start to get interesting, because they're going to have to negotiate a new government. They're going to
they have debts that are due. The timeline for their debts are going to be coming due on a rolling basis. So something has to be done. You can't ignore the situation. It can't be swept under the rug.
I mean, and if they're not able to accomplish what the people have said, you told us that you were going to fight for these things and to wipe out our debt, bring us back under the drachma, and get us out of the euro, and you didn't do that. I think that I don't think it's going to be a very pretty situation.
Yeah. There's also related dynamics that come into play when you look at other countries. For example, Germany is not happy with this QE program. And
I didn't realize
they're not happy with the highest appeals court in the EU system last week. I think it was Monday, a couple of days before the Swiss National Bank made their peg removal decision. They set up the legal loophole by which the ECB can do this QE, much to the opposition of the establishment in Germany. And all of this is getting to the point where the dreams of the Belgian, unified European globalist vision are shaking at the roots. I don't think that the euro is going to survive all of this stuff, frankly. I think that we're going to get some kind of a northern style euro, Germany being the flagship, Holland and Norway and Sweden, actually maybe not Sweden, but Finland, and maybe France. It's kind of hard to imagine the euro without France, even though France is a total basket case right now economically. But, that kind of an amalgamation of a new, smaller footprint for a euro system is viable and probable. I mean, the UK has never been in the euro system, and people will be pointing to that and saying, well, if the United Kingdom can be outside, why can't we just rework the whole euro system and get rid of these quote-unquote pig countries? And that's where I think we're going to see the euro move, particularly driven as well by the strengthening of Eastern-based economies. I mean, China has a huge debt overhang, but they have a tremendous amount of assets and the physical stock of their industrial build-out that they've conducted in the last 20 years represented the entire industrial revolution of America in a compressed 20-year period. I mean, it's just astounding what they've done. People knock China for the excess capacity that they have and the 26% of their build-out of real estate where there's no one living in a lot of these places in urban zones and whatnot. But the reality is that that's kind of like a quasi-physical asset that can help transition some monetary value to a post-reset system worldwide. And when all these things come down, the core of Europe, Germany, and more sober-minded, more sound monetary-minded peoples will see the advantages of having a euro that doesn't have lesser players in it. So the next 2-3 years are probably going to see all these massive changes come. And I should also back up too and talk about China and how it fits into all of this.
Please, because I've got a question regarding them.
Well, I'll dive into it and then ask you a question if I didn't anticipate what you're going to ask. About 7 years ago, 10 years ago, it was really common to read statements from the policymakers in the Chinese government as well as their central bank and even their university system talk about a time frame of yuan/renminbi. It's actually more appropriate to say renminbi when we're talking international, but convertibility on a full-scale basis by 2025, 2030. And now, within the last 2.5 years or so, we've actually been hearing messaging coming from them that it'd be as soon as 18 months forward, if not 3 years. And there's one thing that we can say about China. It's that they always are very conservative with what they put out for public consumption, and that they're usually well ahead of whatever they're trying to say. And I believe that they actually would be in a position to have full renminbi convertibility within a year or so. And that's one of the preconditions to fully open up their capital account and have their currency act more as a reserve currency. And that whole acceleration versus where they were just a few years ago speaks to the fact that they're willing to jump into a new role on an international basis. And, people in the gold sector who follow news, it's Zero Hedge and alternative sources like Silver Doctors, News Doctors, Your Site, so forth. This isn't news. I mean, people are speculating about what China will do and the path that they'll take and all of that. And it's, at this point, I think now, more interesting than not, that, with work that is more consumed by the mainstream, like Jim Rickards' book, and, people in the mainstream of the Wall Street community who a couple of years ago would think that all this kind of talk was complete idiocy.
Yes.
Now realize that, when they can talk to or point to someone in the establishment like Jim Rickards, they're finding it safe to talk about it in hushed tones. They won't go on CNBC and talk about it a lot, but that just it's an acceleration of the end game process. And then at some point, everyone's going to say, okay, this game of musical chairs is on. There's only so many chairs. I want my damn chair.
Yes.
And that's when sentiment shifts and you see these big, fast moves in the market. And that's what powers that first slowly, but then all of a sudden process of the end game unfolding.
Yes. Now, China and Switzerland, just a couple of hours ago, before I called you, Eric, today is Wednesday, January the 21st, and Reuters put out an article. It's one of their classic, 200-word articles that is huge, and what it is, the title of the article or the headline is Swiss Central Bank says inks packed for renminbi clearing with PBOC. Switzerland's Central Bank said on Wednesday that it agreed with the People's Bank of China to establish clearing arrangements in Switzerland for renminbi trading and extend a pilot scheme for Swiss investors. That's the opening line. And what I wanted to ask you about, in light of what you just said, and in light of the Jordan Thomas coming out and campaigning against gold during the Swiss Gold Initiative, saying that we needed to keep the franc pegged to the euro, and then 2 days before he said the exact same thing, and then 2 days after he said that, he depegged the franc from the euro, and now 1 week later they are inking a deal with China to become, how did they say it? It's a pilot scheme for Swiss investors within Switzerland using the renminbi. And this was known probably before the Swiss Gold Initiative. They didn't start working on this, last Wednesday.
Yeah, I think you're probably making more out of this from a conspiratorial type of frame of reference than is warranted, because basically, all of these currency swap boards and liquidity exchange mechanisms that China has been putting in place is all above board. And
yes, and I understand that, but
it's another one of these things. It's just like when they did the deal with Germany many months back to set up exactly the same thing. It in a sense, it speaks again to the rise of the renminbi in the future as a growing reserve currency and the shift of power eastward.
Well, and not 100% conspiratorial in my thought process, but as far as it just seems like that all of these things are just lining up in a particular manner, to where the smart people, like the Germans, now the Swiss, the Australians, and the list goes on from there. I mean, you've got all of these massive economies that are doing direct swap agreements with the renminbi. Okay. And that means that they don't have to use the dollar. They don't have to hold treasuries, U.S. treasuries.
Right.
They don't have to have anything to do with Western banking at all. And
not in the future that can be true. And for a major portion of trade between China and her trading partners, that will be true. It won't be 100% for quite some time. Right now, to put it in perspective, the Chinese debt and currency represents only about 2% of the worldwide reserves that countries store for transaction basis liquidity to facilitate trade and transactions going forward. That's going to change very, very quickly, and primarily driven by the amount of rising trade that's being conducted on a bilateral basis between China and individual countries on a one-off bilateral relationship. There are 24 currency swap relationships in place now
Yes.
between China and 24 other governments.
But you don't.
Sorry.
But you don't need a lot of renminbis if you're doing it in gold, right? You just need a little bit of renminbis if you're going to trade in gold.
Yes, but that is further out in time in terms of
Why?
what kind, I'm sorry?
Why?
Well, it's because it's the reality that the world right now, even the Chinese, love the fact that they live in a fiat world. I mean, the Chinese are smart. They're hedging their bets and creating the next monetary system that they're going to be either in the driver's seat or having, in the passenger seat. And, well, that's a bad analogy, but being, at the table of the leaders with a new monetary system post-reset, and there's a couple of ways that can unfold. That's another subject we can get into later if you want. But the bottom line is that right now, China actually benefits by this goofy credit-based monetary system because they, too, can create fiat to facilitate their trade. And they're able to go get hard assets and whatnot with fiat that they are able to shake before the world, and where there is a perception that fiat has value. In the case of Russia or Brazil or Argentina, and selling agricultural products to China and all of the natural resources that flow with their bilateral relationship with Australia, that isn't facilitated by gold. There's a growing confidence in the Chinese renminbi because of the fact that China is managing their foreign reserves and monetary system more prudently by their acceleration of building a backstop, or the bottom of the Exeter, or the tip of the inverted Exeter pyramid with ever more gold, so to speak, because it helps build confidence. But the reality is that the world trade's predominant transactions now with China are still using either the dollar-based system or their bilateral relationships in renminbi currency swaps. And the best example is what they've done with Russia, where they are now, the numbers are not out, no one really knows on exactly what's going on, but in terms of dollar value, we're easily talking hundreds of billions of dollars of currency that has probably been swapped between the two nations, rubles for yuan, in the last year or so. So, you do have gold facilitating trade that's going on. I'm not poo-pooing that.
Yeah.
Particularly when it comes to Iran and Turkey and those areas where they've been locked out of the SWIFT system. The Iranian situation is actually the best example because they literally were forced out of the SWIFT clearing system in the dollar-based world, so they had very little recourse but to trade gold for oil. But other than those kind of examples, we are not yet in a quasi gold standard just yet.
Well, do you see that coming? And if so, I mean, how is that part of what you were saying a minute ago, as far as the 18-month, kind of time frame where things are going to really get kind of topsy-turvy and even crazier?
Yeah, I think that we're going to have a financial crash. And it's hard to predict exactly when, but I think that it's going to come easily within 3 years, high probability within 18 months. And, things are so unstable now that it could happen tomorrow.
Yes.
But I don't think it's going to happen tomorrow. I think we're going to see major shakeups coming within that period that we described earlier. The end of first quarter, beginning of third quarter, everyone is going to be a heck of a lot more nervous. And the end game is going to probably unfold in a couple of stages. I believe that the SDR negotiation is going to be pushed by China to move forward. They're going to enter the SDR basket. They're going to have a shift in the voting rights of the IMF. And simultaneous to this, and this is something that a lot of people in the precious metals market community debate a lot, and frankly, I think the debate is kind of silly because China loves to hedge their bets and do multiple paths when it comes to their strategic decision making. They're going to go ahead this process with the West, but at the same time position themselves to be able to do very well, thank you very much, in a gold-based reset monetary system globally. And ultimately, I think that the latter is what's going to happen. And it's going to take probably 18 or so months, in the very least, for it to be discussed in full and open, even though the crash might come before then, that justifies the necessity for the change in the global monetary system. But ultimately, we things up so bad that the level of debt that can't be repaid and the derivatives overhang of this sword of Damocles over the entire financial market is going to blow. And the only way to fix or to reboot the system after an implosion, it's not things blowing up, it's imploding. It's a deflation first, and then an attempt to reset the system. I mean, even if that kind of confidence destroying monetary driven deflationary crash can't actually be fixed with QE, because by that time it would be the QE that just was one too many, and the confidence that underpins our system can't be reset by this foolish game of, well, if they just increase liquidity and hope that asset prices rise such that it can fix bad debts because they're either bought directly and dumped on the taxpayers who don't realize that they've just been stiffed a bill that extends for 100 years into the future, or they count unicorns in their estimation of gross domestic product, all of the third quarter of last year as a prime example, and think that, we're going to be able to pull ourselves out of this hole. All of those games that people play in terms of their wishful thinking on the policy establishment front, and all the goofballs that are in Davos drinking their champagne as we speak, all of those lies that the establishment tells itself to try to believe that this game of confidence can continue will just simply evaporate. And the only thing that can fix it is a restoration of some kind of a gold standard. And so that, I think, is the end game. 5 years from now, we're going to be living under a gold standard.
Well, it wouldn't hurt my feelings. I don't think. I mean, I've never experienced it because, I mean, I was born in 1962 and they stripped us of our remaining real money in 64. And so I'm not exactly sure what the difference will be as far
a wee
as
bit of silver in some of your coins up to 1970.
Yes.
That was when they took out the 40% JFKs, and the Ike dollars had some silver in them 1 or 2 years. I don't remember the exact years.
But but it really didn't mean anything at that point.
Right.
Right. I mean, it was all gone. It was all just metal, just zinc and copper and nickel, and that's it. But and speaking of metal, how do you see the market kind of unfolding over the course of the next 2 or 3 weeks, Eric? I mean, we've been seeing some bids coming in, and gold and silver they've been pretty stable. They tried to beat silver and gold down today, and gold is actually flat right now as we speak, according to Kitco, and silver is basically flat, but it's above $18 still, and gold is still staring 1,300 in the face.
Yeah, and they wanted to keep it under 13 before tomorrow's official announcement. It's pretty clear what's going on. You can also see the pattern of trading where, about to eyeballing the chart, looks like about 2 hours, 2.5 hours before the end of London close is when they started getting aggressive with the push down. And what's interesting is that they actually couldn't get silver down very far. I mean, silver is clearly, if you look at the Kitco chart, you can see very clearly that it's well above the trace that it made at the same time yesterday and the day before, which speaks to how tight the physical market is in silver. And The cartel kind of like tries to act when there's a little bit of a slowdown in the momentum such that they can get more bang for their manipulation buck, so to speak. And I think they're just kind of not pushing as much on silver. Silver fell in sympathy as opposed to more probable direct pushing by the cartel today. And I think that that's what we see at the tail of the tape, so to speak, what the price action is showing in volume trading and whatnot. It's interesting that this has happened the day before the announcement from the ECB. It gives me pause as to what might happen tomorrow, because if they're trying to contain things now, and combined with the fact that they leaked the initial possible 600 billion euro QE program, that they're setting up the markets in terms of psychology to try to push the price of gold primarily, but silver secondarily, down tomorrow. And that will be the conventional thinkers on Wall Street will look at it and go, oh, okay, it was just, selling on the news, quote unquote. And that the moves that we saw over the last 2 weeks were pricing in the expectation of the QE program, and then you put a punctuation mark on that when it comes to the Swiss National Bank's decision. So this time frame also corresponds with the Fed's next meeting, and they're going to be talking about how sober their monetary policy is going to be in relation to the fact that they can rest on their laurels with this game that's been going on for literally over a year now between these central bankers in different countries trading off on the role of wacko QE. The United States is trying to present this image that we're actually going to tighten pretty soon and all that stuff. So I would expect that we're probably going to see some pressure in gold and silver just for the short term. But and I'm literally talking, somewhere plus or minus 5 days on both sides of the next Federal Reserve Open Market Committee meeting, and that the momentum that we've seen in this mid-December burst that began around that time to now will probably cool off a little bit, but ultimately 2 weeks out we're going to be challenging much higher prices, and then we're going to continue to move on. That this year overall is going to be a stupendously great year for gold and silver. I think very conservatively, gold will probably do 20-30% off of the beginning of the year price without any trouble at all, with the possibility of seeing a double as people begin to price in what really is going on the international monetary front and banking system front, and people pull their heads out of their rear ends in the conventional Wall Street community, and this titanic amount of money that is managed by these bozos begins to look for safe harbor. And that's going to just put an afterburner on the precious metal sector. We've never gone through a period where you had 4 years down in mining shares, and they telegraphed the move that we are now seeing in gold beginning in October. And I was looking at mining shares closely just because it's what I do, and I started seeing just really large volume turnover in October, and started scratching my head thinking, well, this is just weird. Supposedly we've been in this bear market for 3+ years now, and then why is it that all of a sudden in October we're starting to see the turnover? And it was not just the advance sales associated with tax loss selling that sometimes does come in earlier in the year. It was actually people coming in and buying and positioning to get into the new bull market. It was the smart money moving in. Okay. And I posted a comment I should have gotten a date before we talked, but I believe it was around the last week's show, or the second to last week's show in our Metals and Markets show that we do over on Silver Doctors. Yeah. Fleshing this out for people and showing them that this was in fact a stealth correction that pretty much nobody to my knowledge talked about in our space. And it's very visible. You can just look at a generic volume chart of GDX or any other kind of ETF that gives a good snapshot of the mining shares, and you lay them on top of each other, and just with your own basic eyeball analysis can see an 80% plus volume level year over year through a 6-month window or a 4-month window in the GDX. And it speaks to the fact that after so many years of this painful bear market where we've had all these false starts where, we get up to 26 in silver and then bam, the cartel would come in and kill it. And that was, July and a couple of other periods too where the 26 was the magic threshold number and 22 and so forth. And people just were ground down. Their expectations were annihilated. And so many people left the sector. I mean, the level of sentiment, it was never as low as it has been, say, in the December period last year.
Yeah.
It never was lower than that, ever, in the mining shares, in the bullion in general. And then when you look at things like the level of negative comments and the attack on pundits and their price targeting and all, and to a large extent, a great deal of that being fully justified because there's been a lot of crazy punditry going on. But anyway, this whole process has begun to, at this stage, make most people in the precious metals space recognize that we probably have bottom. But I think that a month or so out, that far more people are going to be braver and declare a bottom, and that more money is going to start pouring in. We've already seen the more conventional Wall Street types inch their way into the space, and you can see it when you look at the acceleration of money flowing into GLD and GDX and things like that. So, and that actually, too, come to think of it, is relevant when it comes to this shorter term pause kind of stickiness with the price that I think we probably will see in the next week or so. Is that some of the massive negative perceptions amongst the conventional finance world has been eased a slight bit, and so we saw a little bit more momentum coming in, and the people that wanted to get in and get positions, they already did get in. And so there's this kind of a vulnerable period where the line of, or the queue of potential bidders coming into the market has been met to a small extent.
So you think that both the mining shares and the metals themselves are set to perform quite well this year?
Yeah, I think we're going to probably see some horizontal action with a couple of cartel-induced spike downs, just like today. You can see the pattern exactly where they push it down in advance of trying to paint the tape to set the stage for tomorrow's QE. But, the metals bounce back, and in grand scheme of things, they really didn't lose that much. And that's kind of the trading action that I expect in the next week or so. But then, Katie Barter-Dollars, this is going to be one hell of a year for precious metals.
I think so too. I think that people are willing, are ready to move into something other than the nonsense that's going on out there. I mean, I think that there's, and let me ask you this. I mean, as far as what's happening with the news doctors and what you see at Silver Doctors and comments that you may read from, your weekly metals and market update. I mean, as far as what people are, what are you seeing and what are you hearing from just the people in general, as far as sentiment is concerned?
Well, it's pretty interesting actually, because the hardcore gold bug community is wrapping their expectations around a high probability of shit hitting the fan and things falling apart in a very material way as early as next month. People like Jim Willey and a lot of other people are talking about major inflection points coming in February. And actually, to Jim Willey's credit, he's been very smart in the way that he's talked about this, because in the interview that he did with the doc that was published, I think it was either yesterday or the day before, I forget,
Sunday.
But it was recorded over the weekend. I think it was Sunday that they were chatting, and he was talking about how it's, he doesn't know when the whole reset kind of scenario that he's painting, which I don't agree with 100%. I think, for example, there's that big debate that we talked about with the IMF SDR basket as prequel to the big act. That's my thesis. He doesn't subscribe to that. He thinks actually that's ridiculous. And then, a lot of people bash Jim Rickards for advancing that as well too. But I do think that that's going to be something that's going to happen. Anyway, we talked about that before, and I don't want to digress too much, but he's been really wise to actually frame his forecast in the sense that, February is going to be when we're going to see some very major shifts, as well as this last Swiss National Bank move as being part of that whole thesis of big stuff coming down, initially leading to a lot bigger changes. And the hardcore precious metals community is, in fact, focusing on an imminent demise of the dollar, where that could actually start as early as February. And I think that's a pretty fair characterization of the sentiment when you ask, what are people saying? What are people talking about? I pay a lot of attention to Facebook boards as well, like JS Mindset and Silver Doctors board, and I got a pretty decent sense of where the stalwarts of the gold bug community are thinking and where their expectations are, and that they are in fact looking for a major crash, frankly, to happen as early as February. I think the probabilities of that are not likely. I mean, it can happen, like I said before, but it's really there's two ways of looking at this. And, being a day late in one's preparation for these kind of monumental shifts doesn't do you any good. So you're a complete fool if you don't at least try to address the very core preparations that one takes to insulate oneself in their financial position vis-a-vis our insane world, because quite literally it's very possible that things can just go completely wacko 24 hours from now. Yet at the same time, it is fair and reasonable to go through the forecasting process to try to assess a level of probabilities for the way things unfold, such that it can help you get a better sense of decision making that you have to do, and frankly, allowing you to not freak out. people in our community have a tendency of just being. It's almost like some kind of a rat in a science project that's being prodded and probed to the point where either you get completely desensitized, and then some people just check out and give up, and they no longer adhere to the philosophy of a stacker, where you just gotta count your ounces and prepare as best as you can, and instead they get overwhelmed and they give up. Some people either go back into the stock market, or they just think that all of my friends and family that are saying I'm a lunatic, well, they're probably right, because I've been doing this for 3 years and all I've seen is declining prices and all this stuff, But the realities are such that the more you study what's going on, the more it's very clear that we're talking about gigantic systems that do in fact change relatively slowly at first. And it's always a question as to where you are on that exponential type of curve where things begin to start accelerating really, really rapidly. And I think, based on my study of the markets, that I think we have a number of months, if not even more than a year, before the larger pools of money that will constitute that exponential acceleration begin to freak out. We're not there yet. We get it in the gold bug community because we're aware of what's going on and we've recognized the problems. Yes. And that therefore we can see that this shit is going to blow at some point, and it looks like it could be as early as tomorrow or next month or what have you. But the realities are such that when the ECB is dumping 600 billion per year of euros into the financial system worldwide, and it does leak out around the world, and when the probabilities are such that the Fed still has its ability to dump more money into the system and do QE for, 10-year bond yields are not zero right now. There's a lot more wiggle room for them to act if they so choose. And the same can be said for China, certainly, and the Bank of England and and so forth. So, and we already saw the Bank of Canada increasing liquidity today. The surprise announcement, and Australia is making noises. So, as crazy as it sounds to someone who's in the gold bug community, and a lot of people will, even go as far as to say, "Oh, that Eric, he's just a conventional stooge trying to argue that, he's trying to be like, like what the better said probably is like what Jim Rickards takes as far as flack, and some of it's actually deserved because of interesting things he's done with respect to like leading off his latest book with a whole chapter in the front talking about 9/11 insider trading and putting that into the currency war context and dollar death context. I'm like, excuse me, why are you talking about that here? Do you have an agenda with that, Jim? Hello, Jim. Anytime you want to debate that, I'll be happy to. But anyway, I think that everyone's on edge, and rightfully so. But my analysis of where we are suggests that things are not going to go boom just yet. We have some time yet, and that's if I hope I'm right, and that will be a good thing because it'll give people more time to attend to their financial position and get their lives in a better place. And nevertheless, for the last decade for myself, I've always operated on a two-par strategy where, I could have seen that, major events could happen and that they could happen right away, so I prepare for them. But at the same time, as we are standing today, as but an example, I think that we do have more time before everything completely implodes.
Well,
but it's going to get extremely dangerous by the end of this quarter and then moving forward. So we're not talking about a lot of time.
Right, and I really think that February is going to be a pivotal month because of I just and something in my bones is just saying that something is really wrong, and the powers that be have been able to patch things together just long enough to get the clown show on last night. And now the bill is coming due, and the American citizen is getting ready to be hammered. And I felt like that for several months now. And with the bombs the financial bombs that have been going off of recent, then it's just I think that by the end of this first quarter that there's going to be blood in the streets, and it might even be literal blood in the streets.
Yeah, I think that literal in the sense that when all else fails, they take you to war. Is
exactly
the tagline that George Celente is fond of saying, and that is indeed very probable. Unfortunately, we're going to see a lot more geopolitical fire-ups around the world, and maybe even a world war. You might even want to link in the write-up for the show that article that I sent you earlier, because it speaks to that whole thesis that one of the strategies and final backstops that the United States can execute is taking the whole world to war. And there are two geopolitical arenas where that can be done pretty easily, the Middle East and the Ukraine. And if there is a whole conflagration that erupts to a larger war, the cancellation of debts, the execution of a currency worldwide renegotiation and reset can be done on very different terms than what people are talking about now.
Yes.
Especially if the world war results where the United States comes on top.
Wow.
Which is not necessarily a given, particularly in the kind of overstretched empire that we have now.
I don't see that happening at all. I really don't. I don't see the United States.
Yeah, I mean, I would agree with that. I think if we're foolish enough to try to whip up a very major war where it's requiring a lot of boots on the ground, I'm talking, 500,000, 1 million soldiers, we simply don't have that. and you can't win wars, even these little smaller regional wars, with just drones and
Right.
force projection from afar. It just doesn't work.
Doesn't work because, and I don't think that the United States could go up against Russia and China, and I think that they would walk arm in arm against us as far as battle.
Their strategic alliance would probably be solidified if some kind of a major conflagration happens in Ukraine, for example.
Yes, that's where I see it happen. That's where I see it happening.
I mean, from a conventional arms point of view, matching up the United States versus those two powers at this point would not result in the United States winning, and it would be a slippery slope to nuclear war.
It would. It could get really, really, really bad for a lot of people in a lot of different areas.
Yeah.
Because I really don't think that the United States would be free from the devastation. I mean, we've been isolated in the past, and we've not had to suffer the way that Europe and Eastern Europe and Russia and China, Japan. We've never had that here. The closest that it's come has been Hawaii.
And or domestic and civil war.
Yeah, the Civil War.
The War of 1812 is kind of nasty, and they burned down the White House.
Well, yeah.
But it's all been minor for most Americans. We really have a very rosy view of both the pain that can come and the damage that comes with war, and also an inflated understanding of our world geopolitical strength and our position.
Yes.
Both economically and militarily.
I mean, if you've got, ICBMs landing in Atlanta and Dallas and San Francisco, mm-hmm. then things will look a lot different very, very quickly, and that's a possibility. I mean, that's
and hopefully we'll get to that stage. I mean, I think that the leadership, for the most part, in China and Russia are more sober than the very aggressive, particularly best defined as neocon within the factions of our foreign policy establishment. But it isn't just the neocon faction. I mean, even back in the 1960s, the Joint Chiefs of Staff were egging on Kennedy, and even for that, actually, now I think about it, even in the Eisenhower era, about trying to do a first strike nuclear attack on Russia because it was perceived that we would win it. And, when you do stuff like that, there is no winner.
Right.
These idiots. It's kind of like this blind hubris that we talk about when it comes to the conventional Wall Street folks and their inability to see the object reality of where they're supposedly experts in. Like I described with those mutual funds and the head of Magellan and Fidelity back in the 90s asking me boneheaded questions about, monies that they're deploying in the tune of hundreds of billions of dollars. I mean, it's the same kind of thing in the military space. Once you get up to the top, it's like these people are acting like inbred imbeciles. They just don't take there's no real politic as it's spoken of in the international relations community these days when it comes to the governing, guiding light of how you set policy. They like brinkmanship. They like pushing things to the edge to the point where you risk losing it all. It's like this one big game of chicken, and it's insane.
It's insane, and these people are insane. Like Lindsey Graham.
It's a form of insanity, literally.
Yes,
you can define it as such clinically. They're that divorced from the realities of the world.
Well, it's I don't know. It's the whole thing. What it really comes down to, Eric, is, and you can correct me if I'm wrong, but I think that most people that are going to be listening to this are looking at it from the perspective of their front porch, and how does it affect my family, What can I do to protect my family? How are these imbeciles that are supposed to be in charge with their monetary bombs, with their nuclear bombs? How are they going to? What can I do to get out of the way of
Right.
these people? And what's going to be the best? You know, what can I do?
You can kind of take a philosophical stance on this stuff. I mean, ultimately, if that is the end game and it comes, well, hey, that's the way it goes. But at the same time, we're still alive. We still have the ability to fight for a different world and a different vision. And living our personal lives in the way in which we'd like to see the world is one part of the overall solution. We have to
Yes.
live our lives in ways that help support an economic system and reality that we want to see. Catherine Austin Fitts speaks about this a lot as well. It's one of the main areas of focus that she's actually been emphasizing in the last 5 or so odd years. Buy foods that are local. You try to not go on the consumption binge that is the messaging of our society of 70% of our gross domestic product being driven by consumption. You people get involved locally with reform-minded political movements. If you're on the left, maybe you get more involved with politics, and I don't really like suggesting this, but the Occupy movement has some elements of reform that make some level of sense, but to a large extent they're kind of diluted and don't really understand things when it comes to economics. There's a section of the Tea Party that has not been bastardized and taken over by interests like the Koch brothers. There's a core constitutionalist freedom element within the Tea Party that spills over into the Ron Paul freedom movement. Get involved with these kind of things, people. There's local groups that work with Campaign for Liberty, that work to take over the local level of government, be it supervisors or county commissioners in your county government. Work to try to get a sheriff that's more of a constitutional type of a sheriff as opposed to someone who's just an ass kiss for the federal government and who's going to be the jackboot leading the charge if in fact we have civil unrest and FEMA rolling around and on and on and on. There are ways in which the masses can have an impact on our political system that brings more sanity slowly into the system. It does take a lot of time. It does move at a speed at which it's very easy to reflect upon and say, shit, nothing's going to work. I mean, but the alternative is you just do nothing and roll over and let things unfold as the powers that be wish it to be. And the realities are such that major movements of political change are always driven by relatively small minorities. It does not take a large percentage of the American population to change the way our government is moving. The start of the revolution that gave birth to our country was built on the backs of something like 4% of the population at the time. It grew to about 15 or so percent once people felt like, oh, okay, this is viable, I want to jump in. But it still was only about 15%. And the same kind of thing can be represented in the Ron Paul movement most specifically, where we have probably 20, 30 million people that self-identify themselves as liberty-minded, libertarian-minded, or libertarian-leaning, and looking for the kind of sound money policies and sensible government policies that can help begin to restore the republic. And that kind of movement is viable, it's growing, and it is in fact part of the reason why we're seeing the kind of pushback that we are when it comes to the growing surveillance / police state and the militarization of the police and so forth. Those kind of political activities are not as commonly embraced amongst preppers and gold bugs and people who are aware of what's going on and are positioning themselves. But I would suggest that when you get your personal position and your family position taken care of, go out and start finding other people of like mind, and you'll recognize that it's not all doom and gloom. It's actually kind of empowering to hook up with people and of like mind and get active. I mean, one of the really amazing examples is what's going on with the Free State movement in New Hampshire, where they're trying to bring in as many people as possible to get a critical threshold. And forgive me, I don't remember the exact number, but where there's a threshold of citizens who, once you reach a certain percentage, that you can actually have some significant change in the actual construction of the local and state level government. And they're already beginning to win elections and have bona fide libertarians take over county governments. And it's just amazing. These kind of things are happening all over the country. You don't really see it much, and it's not reported unless it's directly involved with it. But it is happening. It's a rising tide. The Republican Party, frankly, is either going to die or get a clue and begin to move down this road. People like Rand Paul, Ted Cruz, they kind of represent the general future of where the Republican Party is going to go. We've always had fits and starts with third-party movements in the United States that more often than not just kind of fall apart and don't really do anything. The most recent example being what Ross Perot did. And I think this time around, largely in reflection of the insight and wisdom that Ron Paul brought to the Republican Party factions that I'm speaking about, that there's a movement going on when it comes to trying to make the Republican Party as a vehicle for this kind of sounder policy. But, this last election, where the Republicans took over the Senate and increased their numbers in the House, are largely filled with a bunch of warmongering fools that don't understand foreign policy to save their butts. It's really pathetic, and we got major problems. A lot of people in the Republican Party, and I represent a faction within the Republican Party trying to do this reformation. I look around my compatriots, and I think that to a large extent they just have no clue as to what's going on with international relations. They completely bought into the propaganda about, Russia is responsible for everything that's going on in Ukraine. And you mentioned something like the United States having a direct facilitating role in the coup d'etat that took place in earlier in 2014, and that kind of eyes glaze over like, you're a Martian?
Yeah,
huge problems. But people tending to their own personal lives, informed by, for lack of a quick way of describing it, but just to take on the ethos of what it means to be a prepper is really important. And then, if you have a substantial amount of wealth, someone who's got free net worth of, 100,000 or more, with a house already paid, and they're kind of wondering, gee, what do I do with all of this wealth that I have, and I want to protect it in the storms that may come and whatnot. Precious metals will play a very significant role, and if somebody has a heck of a lot of wealth, 500,000 and more, there's something to be said about owning direct share ownership in natural resource-based companies where either you take the stock certificates directly and you're outside of the banking system, or in the least it's maybe stored in the registrar, the corporate registrar that holds stock for the corporations and processes, dividend payments and the proxies that go out for voting for shares and all that. All that stuff is possible to own a real physical asset that can transition to whatever the next monetary system is and own it outside of the financial system. A lot of people in the precious metal space have this kind of knee-jerk reaction against the words I just said. They don't hear it and don't understand what that kind of diversification can offer, and that's unfortunate because the whole idea of, if it's paper in any form, I don't want anything to do with it. Well, the realities of the world that we live in are such that the United States federal government can outlaw gold and silver. And the retort that I get back when I make that argument is that, we'll just barter. Like, okay, fine. If you have $30,000, $40,000 net worth, and you've got your preps done and all that great stuff, and you want to live in a barter economy, you're going to be able to pull that off. That's fine. I understand. But if you got if you got $500,000 net worth or higher, you ain't going to be able to barter that in an economy that's illegal, particularly with the kind of police state in the surveillance state that they are putting in. So, rationally, there's something to be said about having a good deal of diversification as much as possible. And diversification is always a wise thing. You never want to put all your eggs in one basket. And when you have ownership of and I'm just going to throw out a name here that, the SEC can't go jumping down my back saying that, oh, you're pumping a stock. Well, no one's going to claim that I'm pumping ExxonMobil, because anybody that listens to this show is not going to think that you and me chatting informally about ExxonMobil is going to move the damn stock. It ain't going to happen. So, ExxonMobil.
Sure hope not.
Oh, my God, that would be quite the compliment. Yeah, right. Ain't going to happen. The bottom line is that ExxonMobil's got a relationship with their corporate registrar. I think it's CompuServe, and I'm not sure if that's who they use, but there's only a couple of them, where you can, have your shares held by that entity completely outside of the banking system, and you can literally buy it directly through ExxonMobil, and you get dividends, and you're just sitting there, holding what represents, the majority, like 95% of the value of that claim of ownership, fractional ownership of the assets of ExxonMobil, are the oil assets that they control, the infrastructure of their refineries, that, long-lived assets that are 50-plus year length assets of infrastructure. Those are physical assets. Those are the kind of things that can produce income in whatever currency is the next system, and therefore be able to transition through the carnage and get you on the other side. Now, of course, if we have a world war and all hell breaks loose and Exxon loses oil concessions in various countries, and I get it, okay? Those things can happen. Yes, it's not the same thing as gold in your hand that you're holding. But again, I'm speaking about diversification. And there are scenarios where even the gold that you literally hold in your hand may not be able to be facilitating the kind of, escape from the carnage that you hope that it will. There's a lot of scenarios where it could be made illegal, and
but one of the ways that I like to hold gold is in the form of jewelry.
Excellent.
And jewelry comes with other assets that are attached to it, like diamonds, like rubies.
Yeah, and you can wear it on your person and go through an airport and not declare it. And, there's a lot to be said for that kind of stuff. It's kind of tricky when you buy it because, particularly in the West, unlike in Asia, you can't really get high-grade jewelry of 22K, 24K very easily without paying huge premiums. And it's almost non-existent, actually, in the West. Most of the stuff that's sold here is 18K, 14K. And then they, put on a 30% premium over the gold content because of the manufacturing of generic chains, even the generic chain that they have.
And that's why you go into the secondary market, like flea markets and pawn shops. And
right.
My wife and I have done quite well in that arena, and it makes her very happy, and it makes me very happy. And it's because she gets what she wants. She gets all the blitz and the bling and all that stuff, and all the girly aspect of it, and then I get the assets.
You bribe her as a prepper by giving her bling.
well,
whatever
now hear me out, because she has come around.
Yeah.
And that's been an unbelievable gateway into getting her to understand that, first of all, I'm not crazy. Second of all, prepping is not about dying. And third, this is a great way of creating wealth, which is that's the main objective.
Or at the very least, just storing wealth.
Storing wealth. Thank you. And it's so, because diamonds aren't going to, theoretically, diamonds shouldn't lose value. It's a rock.
It's more dicey.
They are a little. They can
less
be.
liquid, less able to be recognized as what they are in terms of the value, because the quality of the diamond plays a gigantic input into the actual valuation that is in people's perception of value.
Yes.
The grades and so forth, and the quality, the cut, and all of that. And in a crisis scenario, you're not likely to find somebody who's going to recognize all of those qualities to fully realize what our current expectations of the so-called store of value of the gem. In the future, it's the same argument when it comes to off-brand precious metal rounds and so forth. A lot of people will say, well, you really should stick to just government issue mint rounds and official coins, because they have the perception of being recognizable. And there's pros and cons to that, of course. I'm not making that argument. I'm just saying that there is that aspect to the store value function. And diamonds are a little harder, but then again, you can get particularly at flea markets, if you're able to buy well, you can get some serious high density store of value qualities, given the fact that you are talking about diamonds. I mean, a lot of people had their entire families saved by just being able to sew into their garments a few gems and cross borders during World War II.
Exactly.
There's a lot of
stories like that.
Learned.
There's a lot, and it's and once again, it's been an incredible tool to get to bring my wife into the fold of, this is how you do it.
Yeah,
this is how it. And I heard a long time ago that if you want to be wealthy, you have to do what wealthy people do.
Right.
And
think as wealthy people think.
Well, wealthy people, they have gold, they have diamonds, they have portfolios like what you were describing just a moment ago. They actually have physical hard copy stock certificates. And if they don't have them in their own possession, they have them at the registrar where they can go and get them. And they're not in the bank. And I would dare say that most of the really wealthy people don't have hardly anything in the bank.
Yeah, the majority of it is probably, I used to know the numbers off the top of my head, but the average uber wealthy person, it's probably 70% equity as far as their ownerships in companies. This is where the majority of their wealth is. And when you're that big, the stock shares are not held in E-Trade.
Probably not.
But we've gone a long time in the call, but I definitely want to fold this into, going back to the prepping ethos, the American way of looking at the world used to be very much along the lines of a prepper.
Yes.
From the Great Depression and earlier back in time, we were a very sober nation. We thought that it was normal to prepare for harder times and to save and not be consumer maniacs. And basically, the way people talk about preppers today is the way America used to be. We need to go back to our roots. And it's along the lines of the same kind of thing where your wife is coming along and realizing that, hey, this kind of makes sense. It's just a lifestyle that is not necessarily painful or a major sacrifice, at least when it comes to very basic things, of preparing by stocking away some food, and learning how to live where you're living off of food that you store, lifestyle changes that can be made around the edges and so forth. It's just sober to do. And I think that a lot of people in the precious metal space get this, but of that grouping, there's many who are not actually getting off their duff and actually doing it.
Right.
A certain percentage that are just kind of resting on their laurels. And in part probably because it does take money to do some of this stuff, but not a whole heck of a lot when you talk about
really.
Prepping.
I mean, the thing is,
rotating canned goods, and not even talking freeze dried. Just,
right.
Yeah.
Well, I mean, if you when you do your weekly shopping, instead of getting 2 cans of soup for the week, get 3.
Yep.
You know,
Or look for sales, and when
look
you
for
can see
sales. It's
pasta
very
priced
easy.
at under $1 or less per pound, that's a pretty decent deal. Go for it. Stock up. It can last for 5 years if you keep it in a dry, cool space.
Easy.
Yeah, easy.
Easy 5 years. But yeah, you're right. We've been for a long time on this call, Eric, and I didn't know it was going to be this long, but
We're having too much fun.
I'm gonna
go grab my sandwich board and hang out on the corner with the end is nigh.
Oh my goodness! I don't think the end is nigh. No, it's not till the end of February. But I really I could probably talk to you the rest of the day, but it's really I love it. I really do. I love talking to you. Love listening to you sharing your wisdom, because you have a lot of knowledge that you are willing to share, and I'm very grateful that you do share it, because we need it. We need to hear the different opinions. We need to hear that having paper assets is okay. We need to hear that things may fall apart within the next couple of months. They may not. We need to hear. We need to hear these.
And to not be so militant about our
not
views.
So
I mean,
militant
nobody knows the future perfectly, and
right.
Unfortunately, there's this tendency for the bulletin boards and the community in reaction to any kind of new release from a pundit or whatever to, people just pick sides and speak to where they think things are, and there's a whole heck of a lot of speaking and a lot less reading and contemplation going on.
Right.
There needs to be a lot. People need to cool their jets a little bit and not make war on everybody within our own community, and stop the ego-driven kind of nonsense that goes on when you look at the bulletin boards and people yelling at each other. I mean, come on. Generally speaking, though we have our differences, we're all in the same camp, and we're up against the most powerful forces in the monetary universe. I mean, Bill Murphy always talks about how for the last 16 some odd years in his fight at GATA that they have been fighting against the most powerful people in the world, and that's the reality. So we need to.
And if you're bold enough to say that, based on my analysis and based on what is in front of me and what history has taught me, then I think that X is going to happen in X time frame. That takes some guts, and we need to stop bashing people that do that.
Yeah, because there's a lot to be said of just considering someone's ideas and their thesis. Now, again, I will say that a lot of the criticisms that have been elevated in the last few months are certainly warranted, and it gets bad because there's a monetary incentive from a lot of people in our space that have a vested interest in selling newsletters or building more of a following that supports their website or whatever. I mean, that kind of stuff goes on. I came back into the public space from a commentary analyst point of view only about 3 years ago, because I just decided I'm not going to stand by and watch this shit go down without trying to wake people up. But for the largest time, since 2001 or so, when I exited the Wall Street community, I was basically just minding my own business, tending my own money, had a couple of clients here and there, and just doing all kinds of weird stuff and resting on my laurels till I'd made enough money to do so. But I think that one of the things that differentiate the way I look at this whole space is that I'm not really selling anything.
I'm not either.
I'm not here to feather my own nest. I'm here because I've had enough of this bullshit, and I'd like to share the kind of experience that I have to help people translate the insanity of the very complex monetary dynamics that go on. I think it was Henry Ford that said that if people understood our monetary system, there would be a revolution overnight.
Yes.
And he was right.
He was right. And it still is.
Yeah.
I mean,
It's worse now.
well, I mean, and
We were on a gold standard when he said that.
right.
We didn't have leverage to the moon like we have now. I mean, the level of leverage at this stage is, the worldwide global derivatives bubble is ridiculous. The sovereign debt issue bubble is bigger than ever in world history. I mean, that will probably take everything down.
But I want to say something to you, and whether it makes it out or not, I don't know. But the reason that I got in doing this is because of my wife, and it's because of my parents, and it's the whole goal was to be able to reach both my wife and my parents, and to be able to show them and to teach them what they already knew. Because ultimately, at the end of the day, we as human beings, as sovereign human beings, we know everything that you and I have discussed. We already know these things. We know that there's massive problems. We know that we have to take better care of ourselves. We have to take better care of our families. We have to care for our resources. And I'm talking about our resources within our home, because where does charity begin? Charity begins at home. I cannot take care of you if I am sick. And that's what it comes down to. And that's the whole. So as far as selling something, that's what I'm selling. I'm selling knowledge. And if and the cost is free. The only thing that I ask is that for people to learn and to take what you and I have spent almost 2 hours discussing, and don't beat anybody up with it, but give it to somebody else and take it and learn from it. And if you don't like what you hear, don't ever come back. I don't want you to come back. Seriously, I don't. I don't want you to come back.
If they made it this far, they probably like what they hear, hopefully.
Well, I mean, but
No, I understand what you're saying.
I mean, just get out,
Yeah.
because don't waste any more of your time, and sure as hell don't waste any more of mine, because I got things that I could be doing too. Well, we've been speaking with Mr. Eric Dubin, who is the managing editor over at the newsdoctors.com. And Eric, I certainly appreciate you sharing all your wisdom and all your time with us this afternoon.
Well, thank you. It's been fun, and anytime you want to chat, you're more than welcome to record or just chat informally. And if people are interested in the kind of stuff that I do, probably the easiest single place that you can look that concentrates all of the financial articles I may write, or general articles, or podcasts that I'm involved with, would be to go over to thenewsdoctors.com. And then over on the right side, you're going to see a number of frequent contributors in their button, and you can click on the button for Eric Dubin. And even the Silver Doctors weekly program that I produce with the doc will get linked over there, and various other stuff. So it's a pretty decent single stopping spot to check out stuff that I write and stuff that I publish.
Really appreciate it, Eric, and I will talk with you soon.
Sounds great. Have a great day. Go feed that cat.